Hello, AVZ Traders. I trust you are well. Welcome to broadcast number 12 of 36. We are one third of the way there, guys. Thank you very much. I can see the video views count going up on my YouTube. So I'm pretty happy with that. Press in, guys. So good to see most of you at the mentorship breakout course. Now, I spoke about strategy number 2 when the market is trending, is moving in a direction, but there's nothing dramatic that you can see that has caused the breakout. So strategy number 1 has not been in play, but you can clearly see that we are moving between AVZs, between asset valuation zones. And what you have in your hands as a tool to trade is strategy number 2. And all you have to do is recognize that the asset price is changing, that the bulls are demanding higher asset values. They want to get all the way up to the heavens, or the bears are pushing for lower asset values. They want to drop this thing to zero from 1.3463 to zero. That's what the bears want. They may not get it, but that's what they want. Once you recognize that, then all you got to do is look out for our dynamic valuations. This is static valuations, high of yesterday, low of yesterday, upper valuation zone, middle of yesterday, the value of indecision, the AVZ of indecision, and then, of course, the lower asset valuation. And if you are in the upper asset valuation, we're looking to sell. Strategy number 1, okay, at the open, or strategy number 1 at any time. If we're down here in the lower asset valuation zone, it is a buy zone, and we are looking to buy. Okay, that you should know. And that little matrix that should be in your plastic sleeve, on your screenshot in your pocket will show you that and will tell you that. But as I said, there's nothing dramatic taking place. So, guys, what I've done to just save us on time, because I always want to kill these in less than 10 minutes. I've drawn in a few things very easy for you because now you understand them. There we go. Market is selling off. Nothing dramatic in here for you to jump in and say, I'm going to sell. But you can see we are selling off. There is a couple of trend candles. Remember, we said at least there'll be one trend candle or two trend candles. So bears are pushing for lower prices. But you got to wait to see how we test the exponential moving average, the average price, our dynamic valuation. There it is. The market comes back to test it, and it tries in two attempts. It could be a two-legged pullback. You could call it, well, no, I'm not sure there's two-legged, or it's tightly contested sideways. Doesn't matter. But it comes to test the average price. And remember what I said in the mentorship breakout group and in the course. We don't trade tests of the EMA, guys. But once the market is tested, that average price, and you see a breakout trend candle in the direction of resumption, you sell. There you go. You see that you have to sell. Strategy number 2, you have to sell. Okay, because you have seen the market coming back to the EMA and rejecting the price. So these blue lines are just rejections, or rather tests of the moving average, and the market saying we do not want you to go for higher prices. There is no, they are revaluations rather. So let me use the correct term, revaluations. We do not want this asset to get a higher price. That price is yesterday's highest. That's as high as you're going to go. If come to test the average price where the strong players are, and we are saying, no, this is as high as you go. So clear revaluation. All of these blue lines are asset revaluations, and I'll talk about them as we go through. Then you see your breakout trend candle, you take the trade. And where do you put your stop, guys? Strategy number 2, you have to use a measured move stop. So there is a high of the test, there is the entry, bang. And the good thing about the 15-minute, unlike the 5, if you've got time, you can see it's going to close almost there. So you can quickly put your measured moves in place. So for this particular trade, you put your stop there. So I've put in the blue lines for asset revaluations. I'm just going to change this. So because they're already in makes it quicker. So that's where your stop goes. And you know the rules. As soon as you're triggered in, because we are working with 75% probability, we expect it to go away, you have to pull your stop down. Take 50% off, okay? So your stop comes there, 50% off. If you get stopped out, half the risk. It can happen that you get stopped out. This kind of thing could happen immediately, but at least half the risk. As soon as you're in, you're expecting this thing to go. You start to see dodges, etc. You get consent. Say, well, guys, I'm taking this trade. I'm expecting that we will get at least to a 1-to-1. Okay. So there is the 1-to-1, 1-to-1 of the pullback, right? There is a high, there is a low. I'm just putting here so we don't get cluttered. So you're expecting to get to 1-to-1, and you're expecting to get there pretty quickly. But you get all of this stuff, but you see we are moving towards 1-to-1. When you see these guys, either you've put your profit target there and a few points, pips just above spread. Don't put your profit below because market likely tends before there. So you would have banked this quite nicely and get half to one because your stop was here, and that's where the stop should go. If you get more, fantastic. So you either bank your profit or you trail your stop down. When you see that, you are at the measured move. Trail your stop down because you might just get gifted and the market goes down. If it doesn't, get stopped out, make some money, fantastic. And what's happening now? There is another revaluation. The bulls are saying, no, too low, we need higher prices. And we break the 10 EMA, we do nothing. We wait for the 20 EMA, we break it, and we're saying, okay, so maybe we're going for higher prices. But immediately, remember, we're going through the indecision value, the value of indecision. So we do nothing until we get a test of the EMA. As soon as we get to there, the bears come back in again, and the bears say, not a chance. We told you here that this asset cannot be revalued high. We're telling you again the same thing. And you see this breakout. Remember, we are looking at how to jump into the market, but we've seen the breakout, fantastic from the high prices. I need a pullback like I got here. Test of the EMA, I get it, and I get this big candle just looking outside the window to the low of yesterday. There is no ways I can expect to make profit in front of the low of yesterday. So I do nothing. I got to wait to see if the bears are strong. They're going to accelerate down. They're going to come back and test the dynamic asset valuation level. And I'll be able to get in again like I did your strategy 2. But nothing takes place. Why? Guys, tell me. All right, you got it. That was the lowest price yesterday, lowest valuation, and everyone was waiting. And all the big institutions, they absolutely said, you can do whatever you want here. We're not really worried, but we're not going to allow this asset to drop any further. It is not that cheap. It ain't that cheap. There's no ways the thing's going to get to zero. We refuse. We pour money in and get the first revaluation. We had one here, another one here. There's another one here, and we wait. Bears come back and say, now we're going to drop this to zero. Beautiful candle for the bears here. But immediately the market says there is no ways you're going to take this asset down. It is not. We refuse. We got enough money to absolutely reject. We've got enough money to absolutely say you cannot take this asset down to zero. That's not going to happen. So revaluation takes place. Big volumes come in. Big money is coming. Look at this candle after breaking out beneath the low of yesterday. When you expect the thing to crash, you get a beautiful low test candle. It just means there is enough support to say, we need to go higher. So, and what happens immediately after that? Bears try again, but they fail. So now, guys, remember in the course, we have 1, 2, 3, 4, 2 to 5. Oh, there goes my alarm. 2 to 5 revaluations, and the market say no, it cannot go any lower. So now we just gotta wait. And Dr. George says if we back in the above the lower asset valuation zone, we are in a buy zone. So we must look to buy. There you go. Bullish candle tails on the top are a problem. So you wait a little bit, but we are now in the buy zone, and you are just itching and you're just waiting to see how strong the bulls are, the buying, so that you can jump into the market. That's good for the market, but still nothing for us to do because we want to look at a test of the dynamic valuation. Here it comes, bear candle, then you get a big bull candle, and still nothing. But now, guys, like I said in the mentorship breakout group, there's a gradual increase in the valuation of the asset. You can see it going up, but there's nothing dramatic. After this candle here, it would have been fantastic to have had these two candles forming without the bears. Then you could say, oh, look at this. This is fantastic. Strategy number one at any time I'm not getting. But we don't get that. But gradually the market is going up. And all you have to do is wait for a distinct test of the dynamic level of valuation, the 10 EMA. Here it comes and you get a perfect low test candle. It's just one of the ones that we trade. Go watch the video that I did on, it's video number 10. I'm actually just looking on my YouTube. Video number 10 on the bull breakout trend candles we trade. That one, guys, testing the EMA. You've got to take it. You followed all of this up and you got to take it. Now, let me just tell you one other thing. As far as currencies are concerned, I do not trade currencies with less than 25 pips. Any currency, because of spread, it's just too high. So there's 25 pips about there. So I'm going to put my stop here. Okay, that's fantastic. Put your stop 40 pips. You can put your stop here 30 pips. It is perfectly fine. Let's use the 30 pip stop. So you're going to get in there and there is your 30 pip stop. Let's just do that so we can see it. So you take the trade. And as soon as you take the trade, guys, oops, there was your stop there, 30 pip, could have used that one there, 40. As soon as you take a trade, you have to remove half your risk. Now, when you remove half your risk, you don't want your stop just to float around. Just look to the left for a technical level. There is a technical level right there. You can put your stop there. Don't put it there because that's less than half. Just worse than half is fine, not tighter than half. So you can put it there. As soon as you're in the trade, bang, then you get a beautiful breakout trend candle. I mean, that is as pristine as it gets. As soon as you get that, if you look at the notes I sent you, we're talking about it today, your risk management is there. You tighten your stop to here because now when this is closed, because it only becomes a breakout trend candle after it is closed, right? Once it's closed, you can tighten your stop there. So your risk is reduced. You get another breakout trend candle up above the asset valuation zone. I mean, the midpoint. Okay. Now, what you want to do, because now you have that, and you still know, don't close your eyes, that the dynamic levels can still be tested, right? So you pull your stop up to beneath this candle, guys. Don't rush to put it up there, beneath this candle. And now you're just slightly less than break even. If you get out, get stopped out, no problem. Man, this happened yesterday. It's like I wrote the book, I wrote the charts. And what did we say, guys, as we go through the asset valuation zone of indecision at the midpoint? We do nothing except wait for a pullback. Beautiful test of the EMA. That's a beautiful trade. Had this been a low test candle like that, a bullish one, you would have taken that. Now, don't go and take a bearish candle because you can just keep on doing that. Okay, wait for the bull candle. Now you're waiting for the next candle, and surprise, you get a big candle. It is still a valid breakout. Now, here is something else you put in. Where did the trend start? You can say the trend started here. There is leg one, and there is leg two is ended there. Okay, so you see it getting up to there, it's about to close. You say, should I take this? Shouldn't I? Well, take the trade. It's a big candle. Whenever we get a big candle, we can put our stop beneath it as long as we meet the criteria. The criteria is 25 pips, which is there. Okay, so your stop has to come here. Alternatively, and that's not a problem, same thing. Measured move is there, but we want a minimum, guys, of 25 pips. It's almost there, but you put it beneath that bull trend candle. and you got a second trade. So you took a trade here, made a little bit of profit. You took a trade here, you are in profit. You take that trade, you know that the measured move is just beneath the high of yesterday. Fantastic. There's enough of the bull forces, beautiful breakout trend candles, pullback strategy number 2. You got to take it. As soon as you are in that trade, you take half off, and then you wait to see it's going up. It's going up. You can take your profits there if you want. Okay, perfectly fine for you to take your profits there. Or if you want, you trail your stop beneath that. And if you get stopped out, that happens often. Get stopped out there, and that's perfectly fine. If you don't get stopped out, it's going sideways, and you see that candle, you do that. But when you get to that level, take your profits or tighten your stop. That is perfectly fine. When you start to see it going sideways, just pull your stop to above there, because you know we are in a sell zone. If they're strong, they're going to accelerate up. All right, guys, this is video number 12. This is Dr. George Nyabaza. Thank you for all the questions. Thank you for everyone who attended today's mentorship breakout course. And thank you for everyone who has subscribed and joined the team of winning AVZ Traders. Take care, guys. We shall catch up again. Bye-bye.